Hey guys, welcome to the Silver Report. Here we are. It's Friday, April 7th, 2017. We have gold currently trading at $1,267.20. That's a rise of 1.17%. Silver's trading at $18.43. That's a rise of 0.49%. Now what we see, gold passed that all-important resistance level of $1,260. Now we also have silver fighting for that resistance level at $18.50. And all this about the unemployment goals of the Federal Reserve. Now we had the non-farm payroll report come out. Now what they had was non-farm private payroll. It rose 89,000. Of course, the prior report was 221,000. And they also estimated that it would be 170,000. Now that was downgraded also because the original estimates were going to be higher. So what we've seen was a decline in higher manufacturing payrolls. It rose 11,000 after rising 26,000 the previous report. And they estimated around 17,000. So they're really underperforming. It's really hitting the markets and driving up gold and silver, despite the fact that bombs have just dropped onto Syria. So over the month, employment growth occurred in professional and business services. 56,000 jobs were added. In mining, 11,000 jobs. But the big figure here, retail lost 30,000 jobs in the month. Negative 30,000 jobs. Now this is such an important figure because during this whole campaign to try to warp the people's minds into thinking the economy's doing so great, it was retail that was making up most of these job gains. While they're touting about that we've reached maximum unemployment. I want you to take a look for a moment just at the labor force participation rate because it is absolutely brutal. It shows that the people not in the workforce is the highest that it's ever been. And what we're really seeing is a manipulation of numbers. The way that they calculate these unemployment numbers are absolutely ridiculous. What we're seeing in retail, however, is very, very alarming. Now, construction employment, it changed very little in March. Despite having a very, very warm March, is only 6,000. And there was a gain of 59,000 in February. So we're watching slowdowns all over. But the part that retail has lost 30,000 jobs in March, we know that several other major retailers were announcing that they were on the ropes and they were going to be closing more stores. These stores have not closed yet. And so as they begin to downsize and fire more people, we're going to be watching a mass exodus of jobs in the United States. And with an already extremely low labor force participation rate, we are really watching a collapse of the job market. Smart investors already have seen that. Employment in general merchandise stores had declined by 35,000 in March. And it has declined by 89,000 since October 2016. 89,000 jobs lost. Employment in other major industries, including manufacturing, wholesale trade, transportation, warehousing, information, leisure, hospitality, government, they had no change over the month. Little or no change. The average work week for all employees on private non-farm payroll, it was unchanged at 34.3 hours in March. In manufacturing, actually, since they want to tout some jobs added, the work week edged down by 0.2 hours to 40.6 hours. So while they're touting these extra jobs added on, the work weeks have gotten smaller on average. So it's still the amount of money that's going out. The overtime edged down by 0.1 hours. So we're having a drop in hours, a hemorrhaging in the retail sector. Most of these jobs that have been added during this, what they call the expansion, our current expansion of the economy, are completely obliterated. And this is going to get worse and worse because these major retailers, as these anchor stores are closing down in the malls, it's going to put hundreds of thousands of people out of work. And what we're going to begin to see is the effects of this shockwaves throughout the entire economy. It's amazing because a lot of people, and I just want to relate it in a way that it can make sense for you. Because these people get their paychecks. They go get their coffee in the morning. They get their gas. They get their groceries. They go to the store. They watch their Netflix. They get all of their supplies. They go to baseball games. You see, all of these paychecks don't exist anymore. So the effect on the entire economy will be felt. Them not having money to spend, and more than that, drawing on the unemployment, if at all they were working enough hours to be able to get unemployment. And so really the effects of this are going to send shockwaves through the economy. Most of our jobs have been added on have been within retail. And just wait till these earnings begin to come out. And we're going to begin to watch this mass exodus of investors out of the stock market, because of this mania is going to come to an end at some point, especially since we're now on the brink of another war in the Middle East. And it just doesn't stop. It's insanity. It's insanity. We have the Federal Reserve coming out, raising interest rates on a record credit debt level, a record debt level in the United States, touting about a unemployment number that is completely and totally fabricated when we have mass amounts of the United States losing their jobs. And what do you have when you have these kind of payroll numbers coming out that are showing mass losses of jobs? You have war. Always war to cover up this complete mirage of a recovery. Expansion, maybe they're not watching the same numbers. All right, thank you guys for joining me here on the Silver Report. If you like the content, be sure to subscribe, like the videos, share the videos, get the word out. I thank you so much for stopping by. As always, stay safe.